The only key confirmation to get better entries in the market is the candlestick formation. Welcome to the Trading Focus once again. Hope everyone is doing good. In today's video, we are going to show you how can you take an advantage from the bullish candle with a long shadow on the top to sell from there, and even how can you use a bearish candle with a long shadow on the bottom to buy from there. That sounds amazing, guys. Subscribe on the channel, like the video, leave the comment below, and we see you soon in a minute on today's video. Okay, welcome back, traders. In the market, when we are going to be looking for entries to buy or sell from, we need to use some tools like candlesticks. So when we are looking for buys, we are looking for the candlesticks like bullish engulfing, bullish harami, and a hammer candlestick. Those are the candlesticks which are very stronger to give you an indication that the market is going to move bullish or the buyers are going to be controlling the market. So when we are expecting the market to be moving upside, we are going to be using those candlesticks. When we are looking for sell, we use the candlesticks like bearish engulfing, bearish harami, and a shooting star. Those are three stronger candlesticks that you can use to look for sell. Okay, so now in today's video, we are going to show you how can you trade with the candlestick which is different to those we've been talking about. You know, when we are moving up, we need to see a candlestick that is bullish, but this time we are going to be looking for a candlestick which will be bearish. That indicates that the market is going to be moving up. Okay, let's start from here. When the market is moving down, okay, so we are moving down. We have the candlestick formed in the down area where we are expecting the candlestick formed from the bottom, showing that the sellers are losing energy to move the market down. Okay, so we end up when the candlestick is formed like a hammer, but this time is a bearish candle. Okay, the shape is the same as a hammer. This candlestick is a hanging man. The sellers try to move the market down. Okay, then the buyers will be pushing and come with the momentum. Then we drive the market moving up. Then we end up closing with this bearish engulfing with long shadow on the bottom or a long wick on the bottom. So which means that the buyers are going to be controlling the market. So what are we going to be expecting is that this is an indication that the buyers are putting pressure on the sellers, which is going to take the market upside. So how do we enter from this candle? Now, when this candle closes as bearish, okay, with a long wick on the bottom, we are going to be entering for the next candle, which will be bullish when we start break above the body of the previous bearish candlestick, or even entering when we start breaking above this high. We are going to be entering for buy, anticipating the market to continue moving up. Now, the areas we have to look for to buy from that candlestick are those areas of the continuation or in the reversal areas. Okay, so especially when we are in the continuation, let's say the market is moving up, making higher highs, higher low, higher highs, higher low. So on the higher low, which means that we are making a retracement from this area, we are losing our momentum to continue moving down with this bearish candlestick. So we end up closing with a small body on the top from the open of the bearish candlestick. That is a signal that the market is going to be continue in the upside. So now if we get a bullish candlestick, the open of the bullish candlestick, we need the candlestick to be making a low, when we start making a high and start breaking above the previous high or the open of the bearish candlestick, we are going to be entering from this area, or even breaking above the wick of the bearish candle where we opened from, anticipating the market to continue in the upside. So that's how you enter in the trend continuation. Even from the reversal, the market will be, let's say for example, we have the market that is moving down, making higher highs and higher low. We formed a bottom and another bottom from this area. So we have this low. We are rejecting from this area. Then after rejecting this area, this is a signal that the market will be changing the direction to the upside. So if we get this candlestick, we are going to be entering for buy for the next candle, start breaking above the open of the previous bearish candle. So that's how we are going to be entering from the reversal areas, anticipating the market to change the direction to the upside. So now let's talk about the side of bearish. Okay, now here we have the candlestick which is bearish, and the first one is a bullish candlestick. So this is not a bearish engulfing. This is when, for example, the market, we are going to be starting with the trend continuation. We are in the downtrend. Let's say the market is moving down. We are in the downtrend. The sellers are controlling the market. Okay, we are making low, lower high to the lower low. Okay, like this. Let's say like this. Lower low to the lower high. Okay, so from the lower high, where we're expecting to be selling from this area, this is a supply area. We're anticipating to be selling from there. The market was trying to make a pullback. Okay, remember, when we are making a pullback in the downtrend, we need to see bullish candlesticks making a pullback from the previous high, so that the market, we make a retracement from this area, anticipating for the continuation in the downside or bearish continuation. So here we end up with the candlestick which is bullish with small body on the low or on the open, which means that the market or the buyers tried to push the market up, okay, from this area. Then with the selling pressure, remember in our previous video, the sellers will move the buyers down, which means that we are expecting the seller to be controlling the market. Where are we going to be entering from this? If this candle close with a longer wick on the top, we are going to be entering from the break below of the previous body of the bullish candle, or breaking below the open from the low wick the bullish candlestick opened from. So when we start breaking below this candle, we are going to be taking a sell, anticipating the market to continue in the downtrend. Okay, so meaning that we enter from this area, the stop loss will be above that area, anticipating the trend continuation. So then the buyers will be looks like this. So that's how we enter in the bearish continuation. What about the bearish reversal? How are we going to be dealing with this? This time the market will be moving up. Okay, we are moving up. So from this area, we are trying to make some kind of a chart pattern. Okay, higher high, we have the higher low, even which is a lower low, breaking from the previous low. We are expecting to be selling from this area. Then the bullish candle will be open. This bullish candle, we try to break above the high, and we end up with the seller's pressure, ending up closing with a small body on the bottom. or on the open of the bullish candle, then we end up with a selling pressure, which means that if we get a new bearish candlestick start breaking the low of the previous candle, which is bullish, we are going to be entering from that area, anticipating the market to be reversing to the down. That's how we end up with an opportunity to be selling from that signal, anticipating the market to be reversing to the downtrend. For every trader, whatever the strategy that you use in the market, if you are trading or you are buying from the order blocks, demand zone, or breakout and retest, okay, or from support, you are going to be waiting for that candle formation. If you get that candlestick with a long wick on the bottom, which will be bearish, you are going to be looking for the next candle to be open and be bullish when we start to break above the previous high, which is the open of the bearish candle. We are going to be anticipating the market to move in the upside. On the side of the sellers, we are going to be waiting from the areas of supply zones or even those order blocks, where we are going to be looking for bullish candlestick, which will be left with a long wick on the top. Then after that, we are going to be looking for the new candle to be bearish. Then when we start breaking below the previous low of the bullish candle, we are going to be entering from there looking for sell with the trend continuation or with a bearish reversal. So now let's move to the chart and see some examples on how can we master this strategy. So from now, we have the market that is moving down, okay? As you can see, we are moving down as we started from these areas, okay? We are moving down. So now we are going to be dealing with this area, looking for sell. Okay, so now the market was making low, okay, to the lower high, to the lower low, okay, which means that this area is a supply zone. Okay, so now as we are waiting from this area, we are going to be looking for sell. If we are looking for sell, we end up with a bullish candlestick with a long wick on the top, which means that this is a selling pressure. So how am I going to be entering from this signal? Okay, so this was a good retracement from this area, from supply zone. This is a supply zone. So then we are looking for the next candle start breaking the low of the bullish candle so that we can enter from there looking for sell. Now let's set, you can even use stop entry orders. So we are going to be using here a sell stop. Okay, stop loss will be above this area. Then now we are in the trend continuation. Let's say we are going to be looking for TP from this area. This is our TP. So now let's see if the market can give us an opportunity to make this money. Okay, these are TP1, TP2, and this is the target. Let's see what happened. Okay, now we got an amazing bearish candlestick, which means that we are going to be expecting the market to continue in the downside. Let's see. Okay, we are still moving down. Okay, so now we are so close to our target. We got to our target. That is the way in the trend continuation you can use this candlestick, okay, even in the reversal areas. As we are still moving down, we got another from this area. Okay, so this is supply zone. We got a bullish candlestick which has a long shadow on the top. We are going to be expecting the market to continue in the downtrend. Okay, stop loss is above the previous high, expecting the continuation of the market moving down. Okay, now we are looking for buy here. So on the bullish side, now we have the candlestick that is losing momentum to break below this area. This zone is very stronger, so as we are failing to break below this area, which means that this is a buying pressure. We are looking for the next candle to be breaking above the previous candle so that we can look for buy from there. So we need a bullish candle from this. We are going to be immediately entering the market. Long position, if we start breaking above this area, anticipation will be continuation. My TP will be from this area. Okay, so this is my target because this is a continuation. Let's see what happened. Okay, we are bullish now. Can we continue as a bullish? We are ejecting from this area. Also, this was an entry again. Let's see if we can get to our target. Moving up. Okay, this was another one. Okay, this was also another entry from this area. Okay, the entry was supposed to be from here, breaking above, and then we continue to our target. Let's see, moving up. Even this was an entry from there. Now we go to our target. So we got to our target with this continuation of the bullish after we got the candlestick that is losing the momentum from the low, or with a long shadow on the bottom as a bearish candlestick. So this was the one. This is also another one. Guys, remember, you have to backtest the strategy. I repeat this every day. You have to backtest the strategy before start using it on your real account, because you have to make sure that you are confident with the strategy after backtesting. So, guys, thank you so much for your time. Remember to subscribe on the channel. Until next time, take care and be safe.